We begin tonight with the economy's ugly first quarter. The government reports that the economy shrank by a decent amount during the first 3 months of the year. Gross domestic product, which is the broadest measure of goods and services produced across the country, contracted by a significant 0.7%. Now, as we've been reporting, there are a lot of questions surrounding the accuracy of first quarter GDP data historically. But regardless of whether the economy shrank 0.7% or a little less, or whether it even grew a smidge, the bottom line is this: the economy is weak and investors want to see more growth. Steve Leisman has more now on the first quarter, what's ahead in the second and beyond.
Today's GDP number was ugly, but the street is already moving on. The government reported the U.S. economy contracted by 0.7% in the first quarter. That's revised down from the initial read of 0.2% to the upside. A higher trade deficit and lower inventories played the biggest role in the contraction. On the positive side, the data showed some signs of a pickup in business investment and housing. Consumer spending remained about the same compared to the previous report. Many economists are looking past the first quarter weakness to a bounce back in the second quarter and to overall growth in the economy.
We're roughly a 2.5% economy. You have to look through some of the noise in the GDP data. Let's wait for July to see what the fix is. And you need to complement GDP with what we're seeing in employment, what we're seeing in the unemployment rate, what the ISMs are doing.
The data presents a dilemma for the Fed. It doesn't want to hike rates into a contracting economy, but it also has to take account of strong job growth.
If you put in the context of we're still creating the fastest jobs at the fastest pace since the late 1990s, and at that point in time, short-term rates around 6%, it's very hard to justify keeping the policy rate at 0 when the economy is still growing 2 to 2.5%.
Because of the confusion over GDP, labor market data becomes even more important next week. Economists expect 220,000 jobs to have been created in May, and the unemployment rate to be unchanged at 5.4%, showing still pretty strong growth. For Nightly Business Report, I'm Steve Leisman.